Thanks for checking out this question from our daily live Zoom calls. Please like and subscribe to keep learning how we help the largest online community of self-directed retirement investors and entrepreneurs grow and control their retirement funds.
Here our question is, I just opened a non-prototype account with Fidelity Solo 401k. I would like to trade options. Do I need to worry about UBIT? I will mostly sell cash, secured puts, and won't enable margin on the account. So that's a great question. Certainly our plan allows for trading options. One would need to have an account at a brokerage in the name and under the EIN number of the plan, which we obtain that EIN number as part of the onboarding process. We help clients open up accounts at the bank or brokerage of choice. As far as whether someone can invest in options in a specific brokerage account, it's going to be up to that brokerage and what investment options they allow. So let's assume that the account is opened up under the name and the EIN number of the plan. It's at a brokerage that allows for trading in options. The question presented is whether one has to worry about UBIT, which stands for Unrelated Business Income Tax. So another analogous tax is unrelated debt finance income tax. So UBIT would come up in the context of making a solo 401k investment that's generating business income, right? Like let's assume that someone has a solo 401k investment in somebody else's business, and that business, it's taxed as a pass-through entity, specifically a partnership, right? Because you can't invest a solo 401k into equity in an S corp, because the stockholders of an S corp can't be a solo 401k. So let's assume it was an investment in a partnership that's generating business income. And because it's a partnership, it's a pass-through, that business income is flowing through to the solo 401k. So in that case, business income that's accruing inside of a solo 401k is going to be subject to unrelated business income tax. So merely investing in options is not going to trigger unrelated business income tax. But what could come up is the analogous unrelated debt finance income tax. And a lot of times in the literature, those terms, UBIT and UDFI, are used interchangeably, right? I mean, they're both in the same section of the IRS guidance. You use the same form to pay the tax. So it's understandable that they would be used interchangeably. So unrelated debt finance income tax, that applies, or it could apply to a solo 401k, where the solo 401k makes a debt financed investment. And there's otherwise not an exception. Like there's an exception for a debt financed investment in real estate that would apply to a solo 401k. But there wouldn't be an exception for a debt financed investment in an option. So that's where it's key that no margin, which is a type of debt, right, is enabled on the account. So merely investing in options where there's no margin or debt is generally not going to subject the solo 401k to UDFI. So hopefully that helps. Thank you for bringing the good question.